I think people probably over-focused on the China story for the resources sector and didn't focus enough on some of the supply side issues. And obviously one of the commodities closest to Australia is the iron ore story. Global iron ore supply really hasn't grown for the last 4 years. So demand is weaker and demand is more structurally challenged, but the supply side is more structurally challenged as well. I don't see much downside for iron ore prices, and in fact most commodity prices in broad terms, because of that supply backdrop offsetting a large part of the demand story.
Which obviously is really positive news for Australia, which digs a lot of these commodities out of the ground and ships them off to China. Naturally, the Australian economy has been pleased about the China stimulus. What makes Australia so different, though, that its economy is still sluggish, its interest rates are still so high? It just seems to be sort of pushing against the wind while some other economies have been getting a little bit more traction.
Yeah, it is a little bit different. I mean, you can overplay the story. We still expect the Reserve Bank in Australia to be easing, not until February next year, so it's quite some way behind other central banks. But I think the cycle is still broadly similar. There are some timing issues, and maybe they're in response to or reflect the fact that the Reserve Bank of Australia raised interest rates by about 100 basis points less than some other places. The US and New Zealand maybe the most notable examples, and so real interest rates are a bit lower than those other places. And when you look at variables in the economy, inflation a little bit higher, you know, the labour market has weakened a bit less, but all of those are kind of a bit rather than dramatically different. And you're right, in Australia the fiscal side does seem to be supporting the economy a bit more intensively maybe than we've seen elsewhere.